Good evening. Ira Epstein, and here we are with our SPDR stock market wrap-up. And this wrap-up is for Monday, and we're sitting here now on the 30th of January, 2023, about 7 o'clock at night. Now, tomorrow you're going to get your employment cost index, your Case-Shiller 20 home area. You get the Chicago PMI. You're going to get the API numbers, consumer confidence. Then we go into Wednesday with another host of info, but the big baby is going to be the FOMC, the Federal Reserve Monetary Policy Statement at 1, press conference at about 1:20 that wraps up about 2:15. Sometimes they start at 1:30. Then we get the next morning, you're going to get the Bank of England and the European Central Bank announcements. Then on Friday, you get the all-important non-farms payroll. In between, you're going to get the unemployment claims and so on. It's jam-packed of information. I'll be doing some special reports during this time frame. I'm finally going to begin them. I think we'll have a ball with them, in fact, and see what the markets are going to offer us. So get ready for them. In terms of the stock indices, well, in fact, the board behind me, take a look at what color you see this board. Let me step off screen. Other than XLP, right over here, that's the only green. So what happened today is people are now cashing in. It was not the biggest volume day, but I think a lot of money, trade money, went to the sideline today, stepped away. Now they get themselves ready. I didn't know if it would be today, tomorrow, when it was going to happen. As it turned out to be today. We haven't covered SPY, and I don't know the last time I did it with you. So let's do it. As you know, this is the SPDR for the S&P 500 index. If you take a look at the trend, higher lows, higher highs, certainly an uptrend. You're getting to the point, and you just got there, where the 18-day average of closes just crossed over the 200. That's a bullish configuration. We're getting a correction, which tells me big-time support, probably in the 394, 394.70 area, right in that general zone. Where did the market stop? Literally up against the upper Bollinger Band. You can see that right through here. And now the market just sort of sitting back and saying, okay, I did my thing. And momentum did what? Well, you closed at 78.30. If you've taken my enhanced Bollinger Band course, this was a scream out of all longs by the close today. Last 2 minutes of trade, done. When you reopen, that number is going to drop even further. It's already lost its momentum to the upside. In LIT, I think you're too high. I think you're going to fight a big battle at the moment between the 200-day average and the upper Bollinger Band. I thought the first battle was lost at the 100 and that number because it went right over it, never looked back, and it kept going. Okay, sometimes you go for a secondary set of numbers, and that's what you've done. You have an embedded reading. It hasn't been lost, but do you dare reach for the market in front of all these different things that you're going to face this week? I think not. I think that this is a profit-taking time for some of these things, in fact, if anything. In Apple's at the zone between the 100, the 200-day average in gray, and the Bollinger Band. Just like in LIT, momentum starting to shift a bit. It's not shifted down and gotten bearish, but I think it's going to have a very hard time staying over that average on the first go at it. I prefer the sidelines. I'm not bearish. I just don't want to be a buyer. That's what I'd be telling my traders. On AMC, I was looking for a return as the market broke away from trying to stay over the upper Bollinger Band and never did make it to the 100-day average. Now it's going back to neutrality. So the $5 level. The good news is there's a lot of great movies coming out. John Wick you got coming. Got a lot of movies coming out. Creed is coming out again. So there's going to be stuff that comes at you a little later. Notice Avatar's still in the theaters. And I had a buddy that went this weekend. He said it was full. When I went on a Friday afternoon, 10 people out of 200, 250 seats. When he went, absolutely packed. So I like that, That's helping. Having owned the theater, I know what that does. Here's something, if any of you are in the movie business, please do this. I don't have a say in it anymore. You get a 3-hour movie. The smartest thing you could do is have an intermission halfway through. It lets everybody go to the potty. It allows the concession stand to drum up more revenue for you, and people get refreshed for 20 minutes, and then they come back in there. They did this years ago when I was a kid. Okay, there were intermissions, think of Gone with the Wind, 10 Commandments, I can go on, but I'm old, all right? That's what they did. It should come back. If you're going to make movies that are in the 2 hour and 30 minute to 3 hour and 30-minute range, why not put an intermission in? Everybody wins. In XLF, lower low, higher high, you can see what the market is doing right there, trying to develop the embedded reading. So how many days do we have where it's over 80 right now? We certainly have today. We had on Friday, and we had the day before. Not the day before that, but that gives you the 3, okay? So the trade normally would be looking now to buy a bit more of a break and bump out of the market with the red line if it's under 79 on a close. I think over the next few days, the trade is going to be very cautious on doing anything. I'm not convinced they'll do that. This morning when I was putting out my subscriber video, I put out a big caveat. I said, folks, I don't think you have to do any of this buying. I'm going to put out the trades just as they are, but understand, I don't want you to, I'm not going to be doing most of those trades. And the reason is, I don't like trading right in front of this FOMC nonsense, the European Central Bank, Bank of England, non-farms. I back away and then I trade again because the market, if it gets a surprise, the chart and the psychology is built one way, you get a shock, you can be knocked out when you shouldn't be knocked out, or you shouldn't be in to get knocked out. It goes both ways. Stocks, you're going to lose the embedded reading right when you open. You'd have to jump dramatically tonight to not have that happen. Otherwise, the way the math goes, it's going to lose it, and it's probably going to try to gear back here to the 384.13 area. XHB, did we embed? Well, even if we did, does it matter? I don't think you do anything waiting for these reports, but it is a bullish chart. You lost the embedded reading here, and you went right down to the 18-day average. Isn't that amazing? That's what the enhanced Bollinger Band course teaches you. Now, when it all happens at one time, nothing you can do. More times than not, when you lose these embedded readings, it gives you an edge in the market. And as I told you, I'm trying to build a course on it. I'm doing too much right now. I've got so many things that I'm finishing up, including year-end taxes. I just want to get them out of the way. I don't do them, but I got to get all the numbers together. Higher lows, higher highs. You can see how the market's sitting here. Lost the embedded reading. Why be involved? You got a 74 reading. So long. SLV, overbought? No, it's nothing. You're caught in a churn. When you hit the upper band, the lower band, and you go sideways like that, it's like throwing money away trying to catch these trades. I wish you're the best doing it. The strategy that often works the best for this is fading the trend. You're going short at the band, buying the band. I won't do that because it'll screw you up when you get caught and it breaks out one way or the other, and I'm better off walking from those. I've tried them. I know what I say for me. I can't answer what works for you. Copper, you lost the embedded reading. Okay, you're probably going back now to 40-20 to redesign whatever's going to be. Nothing's changing in China, but they got to get stuff going into the chain for demand, and they don't have it right now. They've been out for a week. TLT, lost the embedded reading back here, and now you're challenging and right on what you should. The 18-day average of closes, same with BND. You lost the bearishness in UUP. So where do I think you go? To the 18-day average of closes. Why not? And if you lost the bullishness in the dollar, it means the bearishness or the bullishness here was lost too. So you lost the bearishness dollar, you lose the bullishness then in the euro. It's all, they go hand in hand. That's why you trade one or the other, not both. And you put it together, you try to come up with a game plan for yourself, and that's what I think we do a heck of a job of. And that's what I want to talk to you about right now. Don't leave me. In the mornings, I want you to join me. You know, at 5:30, I start recording the futures, and at 9 o'clock, I'm recording the ETF Spider stock videos. That video's ready 9:45 roughly. Why? Because I need that first half hour of trade to get by me. So I need then 15, 20 minutes to record. The rendering time, the post is another equal amount of time. We tried all the software we can find. Can't find anything to speed it up. If you know it, write me on YouTube and tell me what it is. We can't find it. We have pretty big computers here too. But it's not just a matter of that. It's the rendering time. And if you got a minute of video, you got a minute of rendering, the way most of the programs work right now. But I give you the trade ideas. And then they sit in for the rest of the day. I have had no problem in doing this for years, coming out at that time and the traders following it for the rest of the day. It works pretty neat, in my opinion. So, you got to take it from there. But I want to give you free access to try some of this. So just move your cursor up to the top. You can either try our free research on the futures along with the morning video. You just go to Ira's 2-week trial there. I'd love to give you a 2-week trial to the ETF videos in the stock, and what a time to get them right now if you haven't had it, so you can see what we do there, because all these reports are going to open up the opportunity. So take advantage. All you need to do is click up here to the free offers. It'll take you right there. I'm Ira Epstein. You have a great day. Give us a thumbs up if you like this, and I will see you all tomorrow. Take care.